Hey everybody, JD here with your Rational Trader Market Analysis Daily. In today's video, I want to break down the JP Morgan trade. I put it up on Telegram really late yesterday. I apologize for that. I had been looking at JP Morgan really since late last week and especially over the weekend, targeting this really wonderful stock in advance of its earnings report. Now, yesterday, before it released results, shares were trading just above the mean price of the stock. And again, with the wind at its sails in advance of this earnings report, I really wanted to do the research on this to place a put writing opportunity in front of everybody. I know I did it a little bit late. Hopefully you were able to write those 265 puts. You collected a quarter, which on the surface may not seem like a lot, but it's a slam dunk. Really, to me, an easy money trade, even though, again, the risk of call writing is goes without saying. But for those with substantial assets and are interested in an ATM environment, if you will, then the puts on JP Morgan at actually below 2 standard deviations below the mean was the way to go. So why did I like JP Morgan so much? Well, let's just take a quick look at what JP Morgan one-day moves had been after it released earnings. On average, the positive number of times over the last 5 years that the stock moved higher, that happened 9 times with a median positive return of 2%. Okay. This is not a stock that moves a lot. And so again, at 2 standard deviations below the mean, I was able to select a stock that or select a strike price, if you will, that was I think it was 8% below the mean or below the current price at the time of placing that trade. So again, with the downside, then JP Morgan has moved lower 11 times in the last 5 years after earnings, but the average move down is 1.9%. So again, you see, you're putting the odds in your favor. You're really relying on reversion to the mean. And when you do that, you're just ringing the cash register, in my opinion, writing puts, again, below 2 standard deviations. The 265 strikes are right now trading for pennies. They're going to expire worthless on Friday. If you want to close the trade in advance of that, you can absolutely do that. But I don't expect any catastrophe with JP Morgan. Like I said, I think the wind is at the sails. The earnings report was very strong, and the stock is. Here's what's interesting. What's happening today in the stock? It's moving closer to the mean. That's that power of the magnet. I call it the mean magnet, right? And JP Morgan is moving closer to the mean. There's no way it's going down to 2 standard deviations today. So you can ring that cash register, close the trade if you'd like, and lock in your profits on, again, another great mean reversion cash machine trade. This is JD for the Rational Trader. I'll be back tomorrow with another video. Take care, everybody. Have a great day.